Blockchain, cryptocurrency. If you're like me, you've heard the phrase before, the terminology, but you may not be exactly sure what it is. You may not even know how it is, why it is. These are questions that we're going to need to answer for ourselves because these technologies are not going away. They're getting more a part of our lives. One side of the story is these are going to change all our lives and they're going to change it for the better. Some people are concerned it's going to change it for the worst. We have an expert with us today that's going to answer those questions for us and give us a little bit more data to make that decision for us. Hi, I'm Larry Kortkamp, and this is Biz Pointz TV, the show that introduces you to new and trending business topics, smart technologies, and the people that are making an impact in our small business communities. Got a great show for you today. I know you're going to be interested in these topics. We'll get started with it in just a minute when we return.
Create a stronger and more dynamic business. Larry Kortkamp, founding partner at the Kortkamp Group, talks with industry insiders about trending topics moving the needle for local business today. Here's your host, Larry Kortkamp.
Hi, and welcome back to Biz Pointz TV. Before we continue on with the show, I do want to remind you and our audience that we are live in front of a studio audience, as always. You're more than welcome to come down and see the show, and we will let you know that at the end of the podcast. We are also as a TV program for OBBM. You can catch up on all the OBBM programming on Rumble, rumble.com. Make sure you give us a rumble and share us with your friends. So today's show, we're talking about blockchain and cryptocurrency. My guest today is John West. John is a consultant and expert on cryptocurrency and blockchain. Is that correct?
Yes, it is, Larry. Thank you.
You bet. Good to have you with us, John. We were teasing about the intro about which one comes first, and you said actually you prefer crypto first. Why is that?
Yeah, when I introduce myself, I usually say I'm a crypto and blockchain consultant, or when I write it, or that type of thing. And the reason is it's because of the whole battle between Bitcoin, not blockchain, or blockchain, not Bitcoin. And the early days of, it started with crypto, blockchain did, and then it swayed, no, crypto's bad, it's only blockchain. And now it's kind of swinging back and forth, you know, and also, no, both crypto and blockchain. But in my experience, the biggest impact that blockchain has on us is the cryptocurrency aspect, not the blockchain only. Blockchain only is a big aspect, but crypto is just a massive impact on our lives in the future.
And part of the show today is to delve deeper into exactly what the terms are. So what do we mean when we say blockchain, and what do we mean when we say crypto? We're all familiar with Bitcoin. Obviously, they've got a lot of press, but Bitcoin is a crypto, of which there are other cryptos out there, but they've been around the longest. They get the most press for it. But blockchain as a technology is entirely different than all that. One may be somewhat dependent on the other, but so what do we, well, let's start with blockchain. What is blockchain? What is this, the chicken and the egg? Which had to come first? Blockchain had to come first before we had crypto?
Yep, Bitcoin is essentially a blockchain application. It's funny, Satoshi he never coined the phrase blockchain. That was coined later. It was a chain of blocks, and then they put it into blockchain. But what blockchain is, really simply, it gets referred to as a new type of database, which it is, but it's a really weird type of database. And if you think of a spreadsheet you can kind of picture as a ledger of rows of transactions. And if you put that, a spreadsheet on thousands of computers, each computer will have a copy, and they will keep it in sync so that every spreadsheet has the same transactions, read-only, just written on the end in a row. And so a blockchain does consensus to keep that file or that ledger in sync. And having thousands of computers means if you wanted to change it, you'd have to change, they call it a 51% attack. You'd have to change 51%, get 51% of the power to make changes to that. So it's really secure. If you have a centralized database, you can hack into that database and make changes, and no one may ever notice. But when you have thousands of computers working together, it's very secure.
And actually, with that explanation, I think that's one that everybody can wrap their heads around. We actually, as consumers now, there's cloud applications that allow us to communicate with our friends or our people at work, where we're working with documents in a shared environment. So each one of us is making changes to particular documents, and it's creating an ongoing, but in most cases it's an ongoing centralized documents where each one of these changes are, which tends to be less secure than anything else. So it's the same type of a process, but we're actually creating this new document in all these different locations at the same time, providing much greater security.
Yeah, your document is shared, but it's one copy. Blockchain is both shared and thousands of copies, so the security goes way up.
Okay, so that's the 50,000 foot level of what a blockchain is, but it's also designed not to be hacked, or it's designed to be more secure. So there's other elements that are included in this design of a decentralized ledger capability, correct? And what are all these other?
The biggest element is what we didn't talk about really, is the consensus mechanism. How do all of those computers come to consensus on what should be in this spreadsheet-like thing? Because one could make the argument that, well, I'll just get some computers and put some bad data in there, or make some changes or that type of thing. How is the security really achieved? And this is actually the thing that Satoshi solved. So in a way, blockchain is not new. We were always be able to do it with 15, 20 computers coming to consensus. And what they would do is they would all vote to each other. They would talk to every computer in the network and vote, so that everybody knew in the network how everybody else was going to vote, and then they could come to consensus. But that's really, really expensive to do all of that talking. And what Satoshi figured out was, how do you come to consensus with thousands of computers without voting? And that's where the proof of work concept came in, of solving this math problem and purposely taking 10 minutes. So the security was added by slowing it down. It has to take 10 minutes. And therefore, to overcome it, you have to create this huge compute power to try to overcome that time frame.
And this is, I don't want anybody to get misconstrued here, this is not people that are coming to consensus, this is actually within the computers, yeah, the programming or algorithms or what they're doing, but it's these computer, I think you referred to them as nodes before. Is that what each one of these computers is?
They're called nodes, but just really servers.
Anyway, so whatever they are, they're reaching this consensus that the data is correct by sharing it simultaneously with each other. Are they comparing it to each other's documents? Is that what they're doing, or transactions, whatever those transactions happen to be?
Yeah, and I should say there are different consensus mechanisms now too, but the original one. Actually, validating the data is really easy and really fast for them to do that. So in the case of Bitcoin, if I want to move, 1 Bitcoin from me to you, I submit a transaction that's moving this Bitcoin from this address to this address. Validating that transaction is really fast. But the proof of work, the really odd part about it is it solves this math problem, which seems to be a waste of time. But what it does is it slows it down to say it's going to take 10 minutes to solve this math problem. And whoever solves it, that's the block of transactions. That's the next 2,000 transactions that go on the block. So every 10 minutes, there's another 2,000 transactions that get processed. And validating the transactions is simple. Solving the math problem is hard. And that's what all the compute resources are doing.
And that one's going to take a little bit more getting into this, the math problem, how it's created and what is it. Because I'd like to talk about that, because that actually takes us into the next segment, which is crypto, right? It's talking more about the money side. So we're going to get a quick word from our sponsors. We have some terrific sponsors that are here that help us each day. We're talking about a technical application right now. One of our good sponsors is youritanswers.com. Great people that do a great job for you as an MSP or an IT advisor. Our great set location here is through Office Furniture Source. And again, you can see the program on rumble.com. Make sure you check it out and give us a rumble when you're in there. We're going to hear that word from our sponsors. We'll be right back with more from John West on cryptocurrency. See you in a minute.
My American dream is to help you stay healthy and energized so you can live your American dream.
Our American dream is equipping future generations of American dreamers.
My American dream is to protect my community so they can live their American dream.
My American dream is to bring you some spice and flavor to your life.
Our American dream is ensuring what's most valuable to you.
Our American dream is creating opportunities for healthcare providers so they can have their American dreams.
My American dream is serving our business community and advocating for all of your American dreams.
Business runs on technology, and human beings are creatures of habit. Unfortunately, not all our habits are good. Technology, when it works, is supposed to make our lives easier, creating routines that allow us to protect customer data, track our progress, forecast the future, communicate better, and move much faster. So, you need technology solutions that work when you're not working, or simply not paying attention. Smart technology solutions, making the complicated uncomplicated.
Hi, and welcome back. Today we're talking cryptocurrency, blockchain, with our guest, John West. John, when we left, we were just getting started in the crypto side, but we left kind of on another area, which was this math problem that has to be created. Can you go a little bit more into that? What do we mean by a math problem? Who's creating it, and how is it answered?
Sure. So first of all, too, this is the proof of work consensus. So the work you're doing is solving the math problem. And the math problem is a calculus problem that's in the code, in the Bitcoin code, is proof of work. And the miners or the nodes or the servers take in 2,000 transactions, put them in a block, now try to solve this math problem. And by solve the math problem, it means you have to come up with an answer that's less than a preset value. And that preset value changes all the time. But it takes a long time. It takes 10 minutes. All of you got to try this input, this input, this input, this input. These computers are trying all these inputs so that they can get an answer from the math problem that's less than a certain value. And it takes them 10 minutes to figure that out. If they get the answer, whoever gets the answer, it will, then they raise their hand and say, I solved it. And everybody can check it really quick. Yep, you solved it. Okay, that's the block of transactions that's going to get used. And that's the next block. And then as you add more computers to the network, they can solve that math problem faster. So the difficulty adjustment is a very important thing in a proof of work system. So every 2 weeks, depending on how many nodes are on the network, the difficulty can get adjusted higher or lower.
So is this how crypto is actually created, because there needed to be an incentive to reward these miners from doing all this work?
Yeah, whoever solves the math problem receives the block reward. And with Bitcoin right now, that's about 6.25 Bitcoin. And that halves in a couple of more years. It halves about every 4 years. It gets cut in half, the halvening. But yeah, you get the block reward for solving the block, and that's the incentive. And you get the transaction fees, but the block reward is 90% or so of the.
So a blockchain today is worth about,
six times 60,000.
Yeah, 60 grand, something like that.
Yeah.
Interesting. So we've got all these miners that are going at it with 50, 100 machines. How often are these being solved now in order to generate 2,000 transactions? Is this now going at so many a second, so many a minute? How many are being?
It's always every 10 minutes. So the Bitcoin network is designed so that a block comes out about every 10 minutes. And when you add more computers to it, then the math problem will get adjusted automatically to make it harder. So for a while, you'll get it in 9 minutes. You add more computers, you'll get it in 8 minutes. But then every 2 weeks, it adjusts, and it'll go back to 10 minutes. It'll make the math problem harder. So based on the number of computers that are on the network, It does a difficulty adjustment, it's called.
But 2,000 transactions is nothing. So how is this scaled?
Right. That's it's layered. So money today, assets today they're different layers. And so in the case of Bitcoin, Bitcoin is considered layer 1. And over time, it will only be the very large settlement transactions. So there's a layer called layer 2 called Lightning Network. And there you can take some Bitcoin, lock it over here, and do payments. And those payments are instantaneous and near zero. And then if you're done, or when you're done, you can unlock your Bitcoin over here if you need to do something with it on the main layer 1 network.
So that's probably how consumers are
Yes.
are approaching or getting involved in this. They're at these different layers that they're
Yep.
doing these transactions.
Yeah.
And the goal for this is, because you and I have talked about this a lot, it's providing another option to a traditional transaction between you and me. So you've got a bottle of water to sell, I got the money to buy it, and there's usually a third party that's holding either both of those things or one of those things, because I'm not going to give you my money until you give me the bottle, and you're not going to give me the bottle until I get the money. So it's always been, for all time, there's always been a third party involved. And today that's our banks, it's our credit unions, it's all these other vehicles that have been created to that. And the blockchain design is designed to offer another solution that doesn't involve a traditional institution group as the third party. Is that correct?
Yeah.
Yeah.
It was created to disintermediate things. Now, disintermediate intermediaries or centralized parties that you were describing, banks being one of them. Intermediaries in our lives are really helpful. They can make us really efficient. And they can also be dangerous. Bad things can happen and things can go sideways. And so it'll be really interesting to see how this evolves the blockchain space, the crypto space, on what gets disintermediated and what doesn't get disintermediated. But in the case of Bitcoin, the first blockchain, yes, the whole reason it was created, whether people like it or not, it doesn't matter. I'm not making a statement on whether it's good or bad. It was created to disintermediate the creation of money. From banks, from government. So Bitcoin, there's only ever 21 million Bitcoins on this Bitcoin blockchain. You can't create more, and you can't control who does what with it. You can try to regulate around it and that type of thing, but it's this decentralized
How did that
network.
number come? What's this 21 million thing?
I don't know. It's a good question. I don't know how Satoshi, and I keep saying Satoshi Nakamoto, the pseudonymous creator of Bitcoin.
I was going to say, is everybody, supposedly that's a seed, nobody even knows if that's accurate or not.
Right, it could be a person, it could be a group of people, no one knows. But
and the fact that that's the only, because it's somewhat of a people are not really a part of this, that all these numbers seem arbitrary to some. So 21 million, just picked it out of the air. How come I can't make more? Why can't there be? How are those things set in place so that you can't do all the things that you would normally think you could do?
Yeah, it's in the code, and the code is decentralized, and so no one controls the code. And the ethos around Bitcoin is that will never get changed. It will always be 21 million. That's the whole purpose, is concept of hard money. People will argue, and I agree with them, if the U.S. had not left the gold standard, Bitcoin never would have been created. It never would have existed, because it was created as an answer to, or as a choice to, money controlled by government, soft money or fiat money, or money that's just printed. That's not hard money. But so that's a pretty core requirement.
Yeah, and you're kind of giving the audience a little key to that last segment we're talking about, because then we get into some of the areas too, and quite frankly, we've talked too that this is a long conversation. I mean, it's pretty deep and involved, and there's other ramifications that come from it. So If there's no intermediary that is checking to see who's actually creating the money, depositing the money, trading the money, it opens the door to all kinds of people. So I no longer have to move 16 million, dollars of bullion someplace in a plane. I simply upload it to my Bitcoin account through my phone, and now my drug cartel, drug lord is available to take anything across the globe. So there's all sorts of bad things that can come about that, and the security's been questioned to a certain extent. We in the U.S., it was big news that somebody had actually cracked somebody's Bitcoin account and took the money back, and you and I have talked about that before, and we're going to talk how you say that isn't possible when we come back from this next break. We're going to hear another word from our sponsors. Make sure you check us out on Roku and on Rumble for the video, and you can catch all kinds of OBBM programming, whether you're listening to us or watching us on all your audio channels that you listen to, Spotify, iHeartRadio, Amazon, whatever you need to check out for your own personal listening devices. We'll be back in just a minute for more with John West.
90% of news outlets in the United States are controlled by 6 corporations. They're not out to tell you the truth of what's happening. They're out to tell you the picture of the world that they represent. The mission of the Epoch Times is to chase the truth, to ground all statements in facts, and prevent people from being misled. This is a battle between truth and deceit. Subscribe today and join the Americans who are seeking truth and tradition. We'd love to have you on board.
My American dream is to help you stay healthy and energized so you can live your American dream.
Our American dream is equipping future generations of American dreamers.
My American dream is to protect my community so they can live their American dream.
My American dream is to bring you some spice and flavor to your life.
Our American dream is ensuring what's most valuable to you.
Our American dream is creating opportunities for healthcare providers so they can have their American dreams.
My American dream is serving our business community and advocating for all of your American dreams.
Business runs on technology, and human beings are creatures of habit. Unfortunately, not all our habits are good. Technology, when it works, is supposed to make our lives easier, creating routines that allow us to protect customer data, track our progress, forecast the future, communicate better, and move much faster. So, you need technology solutions that work when you're not working, or simply not paying attention. Smart technology solutions, making the complicated uncomplicated.
Hi, and welcome back. You're listening to Biz Pointz TV on the OBBM network. We are an on-demand show, so you can catch us anywhere you get on demand. Roku, Fire TV, and of course your video channels. Our favorite is Rumble. Make sure you check us out on Rumble. When you see us there, give us a rumble and share us with your friends. Today, the subject matter of today's show is cryptocurrency and blockchain. And our guest today is John West, a consultant on cryptocurrency and blockchain. So before we left, John, we were starting to get into some other areas of use as well. The technologies are great, but like any other technology, you can use it for good, use it for bad. So I don't want to direct our conversation in any specific place because there's a lot of areas we can talk about. You do a lot of talking and visiting on this subject. What do you hear are some of the main concerns that people bring up?
Yeah, well, first of all, the history of Bitcoin is horrible. I mean, it's Silk Road, it's drug, it's fraud, it's and then after you got Bitcoin, we had all these ICOs and all these ripoffs, and so there's a lot of reasons why people have a very bad perception of crypto, and a lot of legitimate reasons. And when you're in the space though every day, and you see how far and fast it's come. For example, estimates right now are, I think it's less than 2% for sure, and it might even be less than 1% of Bitcoin transactions are fraudulent or criminal or that type of thing. So it's gotten under control a lot. And the interesting part is Bitcoin transactions aren't anonymous. The criminals thought that it was anonymous in the beginning. It's pseudo-anonymous. You know, your address or your account number is out there. It's very transparent for people to see. And then you can start applying some technology to that and start seeing patterns, and you can start to pinpoint and where money is going and where it's coming from and who has what addresses and those types of things. And so there's businesses that are built up around that already in terms of trying to, you know, find dark money and quarantine stuff and
so
those kinds
it's
of
somewhat
things.
visible, but probably not as much as, say, an IP address for a computer terminal, or?
Well, it's just as visible as an IP address. It's just that no one, like an IP address, someone has a registration of who owns that IP address.
Right.
Whereas your Bitcoin address, no one starts out with a registration, but they can kind of figure it out over time.
Right.
So, and people want privacy though, so steps are being taken. Well, how do I do private transactions? So it's always going to be, you know, just like with today's cash or today's, you know, electronic money, this cat and mouse game.
So when we went to break, I had just mentioned the recent item in the news where somebody, our federal government, said they'd actually recovered some ill-gotten gains from somebody from their Bitcoin account. Yeah. But that's kind of not correct in complete terms.
Yeah, the question was they were sort of trying to give the impression that they had hacked Bitcoin to recover the funds, or people jumped to that conclusion. And Bitcoin is, one of the attributes is it's probably one of the most secure pieces of software that's ever been created, never been hacked. And the key is this thing called your private keys. So if you have your private key, then you can control your money that's on the Bitcoin network, your Bitcoins. And what happened really is they found the criminals' private keys, and then they used the private keys to move the Bitcoin.
So it's like anything else, they hacked his password. They got his password, and that way they had
it's a form of password, yes.
Yeah, they got their key to the candy store through that.
Yes.
Well, it's certainly becoming, I don't think it's leaving us anytime soon. It's certainly invading our space and everywhere. PayPal accepting Bitcoin now, and several other places are accepting it as well as a currency level. But we hear, again, Bitcoin is just one of many cryptocurrencies. So what's to stop everybody from creating their own cryptocurrency and their own, whether it's in their own country or whether it's in their own company, or whether, I mean, some of these companies are huge anyway. So Apple makes its own Apple money or whatever it happens to be. Why are we not concerned about more cryptocurrency being created?
It is. So the difference is there's thousands of cryptos out there right now. And just like during the .com era, 95% of them are eventually going to fail. So they're startups is really what they are. So that's one thing. Now Bitcoin.
Why would they fail?
Because they won't get a market.
Okay. Somebody won't. I won't accept your John money. Is that why?
It isn't really money, the other cryptos. So Bitcoin is the only one where the goal is to be a monetary system, money. The others are really more about creating the ability to have decentralized compute and storage. So an easy way for people to maybe understand this is Ethereum. They added smart contracts to Bitcoin. Well, that's so that you can do more higher levels of computing. You know, you can write more of a program, a longer program, to do smart contracts, to do work in a decentralized on thousands of computers.
Which, and I don't want to get us this far into the show, I don't want to get us on another tangent, but going back to our blockchain technology and the fact that we have this decentralized ledger, there are other uses. Yes. I mean, we're focusing on crypto and some of the other uses for that, but this is a ledger of data. So there are other things that can be placed into this ledger. And one of the biggest uses now is the education system. They're trying to use it for a lot of different applications there. And some of those are very good. So if you're looking for a job, you can have your resume and all the associate documents that go with it, degrees that can't be duplicated or whatever. So you're no longer worried about someone hacking your school and duplicating yourself. It's a way for that. The education system kind of scares a lot of people because it's involving, but it's not just the blockchain there, that's data. They're concerned with how data is being used and manipulated, and I think that's really more a focus for maybe another show for us. We'll kind of delve into that. But But the blockchain side and the crypto side, some of the nefarious things that I'm concerned with is, it's my understanding that each crypto transaction or whatever can be located or tracked to a certain extent. And if we were in the US, for instance, to move from a dollar-based system to a crypto dollar-based system where cash is no longer accepted, what types of opportunities is that for even our own country to exploit that situation?
No, that's a good question. So countries are creating their own crypto, and the US is certainly one that's looking at it. And they call them central bank digital currencies, CBDCs. Those are taking existing fiat like US dollar or euro, or China has one, it's in production. And China is using it to track everything about its citizens. It's programmable money. The US and Europe say they won't track or track nearly as much, but that is a problem when you add technology to money and the potential for tracking things. But if you take something like Bitcoin or some of the other cryptos, those decentralized groups of people that work on it, the ethos would have to change. And that won't change to add tracking to Bitcoin. But what people will do is they'll add it to I mentioned,
different levels,
layers. Yeah. So people that create phone apps that let you use Bitcoin, they will do the tracking. As a matter of fact, some of them are required to. So if I want to use my phone app, Coinbase or Kraken or Gemini, to buy Bitcoin on an exchange, those exchanges are required to collect information from me so that they can comply with KYC, know your customer, or anti-money laundering laws and those types of things. So the tracking with crypto will happen the same way it does today with cash or digital money at different layers of the tech stack, and governments will ask companies to comply with laws and the companies that have customers.
Okay. I mean, there's a lot of good things that come from it. I won't have that story from my bank anymore that it takes 48 hours for my wire transfer to clear.
Right.
I'll get it in 10 minutes.
Yes. And that's why they look at adding this technology to fiat, the CBDCs. It's immediate settlement, cross-border, programmable money, really, really cheap fees. Those are some of the features of crypto that today's money doesn't have. So it doesn't matter if you're a central bank digital currency or a completely opposite Bitcoin, you get these features, which are extremely valuable in consumer life and business life and family life, global trade, those types of things.
Well, we've talked about a lot of stuff, but unfortunately we just talked about like this much. So we're going to have you back, and we'll get into other applications. Plus, some of the parts that I didn't even really get into is how the miners are using some of this alternative electricity in order to power that and make it a little kinder footprint on our power grid. But John, thank you very much for being here today. John West, our cryptocurrency expert. We're going to wrap up the show today. You're watching Biz Pointz TV. You are on the OBBM network. You can see our network just about everywhere. You can get on-demand programming, audio podcasts through Spotify, iHeart. Thank you very much for our sponsors. Again, youritanswers.com, Office Furniture Source, and of course our home base here, Grace Point Media. Grace Point Media is very good to us, and they're a great business aid to your company as well. Again, we are recorded in front of a live audience, so make sure the next time you come by and check us out. Till the next time, thanks again for watching Biz Pointz TV.
To be a guest or request sponsorship information, contact the Kortkamp Group at 972-824-8001 today. Production and programming information requests for the OBBM network should be directed to Offbeat Business Media by calling 214-714-0495 or send your request to info@offbeatbusiness.com. Biz Pointz TV, podcast, and radio show are produced by Offbeat Business Media for the OBBM network. Unauthorized use of logos, audio, video, or reproduction is strictly prohibited.